I'm with the 30-year, well above 7%, and the Fed expected to hold rates steady. My next guest expects demand for new homes to keep climbing. New homes, that is, calling 2024 a golden age of home building. Joining us now, David O'Reilly, CEO of Howard Hughes Holdings, a commercial, residential, and mixed-use real estate developer. Mr. O'Reilly, welcome. You call this the golden age of home building. What contributes to that assessment?
Well, we have demand that's meaningfully outpacing supply. We see new home buyers, average age 35, entering the market with its really millennials delayed household formation. About 12,000 people a day are turning 35, and wealthy retirees looking to move near their children and grandchildren, driving demand. You know, Diana just mentioned it. We saw increased guidance from Pulte, despite the fact that they're meaningfully buying down mortgage rates. And it's that unique confluence of strong demand, no supply because there's no resale inventory, and large public builders with a meaningful advantage through those rate buydowns that are driving their results.
That is an important advantage that the home builders have, is the ability to offer that kind of purchase assistance to people who need it. I am blown away by where you are today. It's called Terra Vallis. Did I pronounce it correctly? It is a
That is correct.
It is a new development in the Phoenix market, 37,000 acres. You plan to build 100,000 homes there?
100,000 homes and 55 million square feet of commercial space over the next 40 to 50 years. This will be a city, when we're done, about the size of St. Louis. And we just closed contracts on our first almost 500 homes this past month. And we're under negotiations with builders for the next 500 lots later this year. It's incredibly exciting. There's a pent-up demand. And Phoenix is in the path of growth and relatively affordable compared to many other cities in this country.
What do people want today in a new home or in a new home community development? I know they want the Sun Belt, but take it from there.
Walkability. They need connectivity to nature. They need great amenities, community centers that offer those conveniences that they may not be able to afford in a home that is modestly shrinking recently. Home sizes over the past 4 to 5 years have come down 8 to 10%, but they're still double where they were in the 80s and the 70s. We're still over 2,000 square feet on an average size of a new home. So if we can give them connectivity to nature, great trail systems, great schools, and an amenity base that is, far outpacing our competition, we think these communities will continue to thrive.
Do the millennials, do the Gen Xers, do they sort of want the same thing that the 55 plus people want?
They do. I think the younger generation, the millennials and Gen Xers, are looking for more environmentally friendly homes, those that are more green, as well as trying to find within their community that, third place to work. They work in their office, they work at home, but that third place is really, really important. Whereas the retirees, those that are turning 65, that are largely boomers and very wealthy given the housing run-up they've enjoyed over the past 30, 40 years, are choosing to live near their children and grandchildren. So by de facto, they want those same things because their children are those that are seeking those amenities that I just mentioned.
Forgive me for not knowing. I know you build and operate developments. You have the Seaport in New York. You have Summerlin in Nevada and other things. But you're also an enormous landowner, as I understand it. Do you then sell off parcels of land to other builders for them to build and operate developments, or what?
That's exactly right. We sell the residential land to our home builder partners, mostly large public, large private builders. We take that capital and use it to build the amenities in our communities that we need: office buildings, apartment buildings, shopping, dining, experiences, theater, arts, etc. And that's our self-fulfilling cycle. The more we amenitize our communities, the more our land is worth, the more money we earn from selling it to home builders. And that goes on and on for decades.
Do you have any concerns about commercial real estate? Everybody seems to be wringing their hands at least a little bit about it. And I don't mean to paint commercial real estate with a broad brush. There's obviously industrial, which is doing very well, but offices have been a weak spot.
Certainly. And it's been the bifurcation of office buildings between the haves and the have-nots. Those that are highly amenitized, Class A space, and offer short commutes for their employees continue to outperform, whereas the far-flung surface Part 2 and 3 story tilt construction are going to continue to suffer. We benefited that our office portfolio is entirely contained within our communities. In the Woodlands alone, our office portfolio has increased occupancy several points over the last several quarters. And it's largely driven because we offer, less than a 10-minute commute for those that live in and work in the Woodlands. And that benefit has really materialized into some great results for us.
Final quick question here. Your longtime chairman of the board, Bill Ackman, a person who's very familiar to CNBC viewers, is just stepping away from the board. He's been there for, 14, 15 years. What has he meant to the company?
He's been our driving force. He created the Howard Hughes Corporation out of bankrupt General Growth Properties 14 years ago and has been instrumental in creating this incredible platform over that time period. He may be stepping off the board, but I am certain he will remain intimately involved in Howard Hughes going forward.
Well, he's going to be a big shareholder, so he will remain intimately involved if we know Bill. Thank you so much, David. We appreciate it. Come back anytime.